In this interview, we speak to Frank Giustra, who's one of the world's most successful investors in precious metals. He shares with Real Vision the lessons that he's learned in his career, and he points out the opportunities that he saw on the horizon. In Latin America, he talks about how China may be actually buying more gold than they're letting on. It's a very interesting video that's sure to turn some heads, so I hope you enjoy it. Frank also makes some very bold calls. This interview was filmed in 2016, and he predicted that the price of gold would rise astronomically, which it has. So it's a very interesting video, and I hope you enjoy. Thank you.
I'm here today in Vancouver with Frank Giustra, CEO of Fiore Group. Frank, welcome. Thanks for taking the time.
Thank you. My pleasure.
I saw an interview you did with Cambridge House about 3 or 4 years ago. And you were sat in front of a fireplace. It looked very cozy, but the message you were getting across was a really powerful message about the state of the world and where we were in 2012. And a lot of that has really come to pass. So I want to talk to you today about how you see the world and some of your views on that. So let's, if we can, just dig in with a little bit of background for the people that don't know who you are, perhaps get some backstory.
Sure. I started my career in the investment business back in the late 70s with Merrill Lynch, and eventually moved over to a tiny boutique firm that I grew with, and eventually became the chairman and CEO of that firm. It was called Yorkton Securities. We focused on resource stocks. That was where I took the firm institutionally as a boutique resource institutional firm, and we became quite good at what we did, which was recognizing that at the end of the when the Berlin Wall fell, we recognized there was an opportunity that the world was going to open up in terms of investment opportunities in the mining sector, and so we went out and promoted our abilities to help governments change their mining laws so that we could bring in investment, and we created a great business doing that. And I did that right through to the mid-90s and left in at the end of 95. I retired before I was 40. I just decided I didn't want to do it anymore. We'd done very well.
We've all been there.
And I left at the top of the market. And unbeknownst to me, 3 months later, the Bre-X scandal hit and the whole resource market died for another 4 or 5 years. But I left that, and then I started Lionsgate, the film company, in 1997, and ran that for 6 years. Till 2003. I ran it for 3 years and then stayed on as chairman for another 3 years until 2003. But in 2001 is when I made the call that changed my life, which was the call on gold. And I wrote a couple of papers on the subject of gold and the US dollar. And I published those papers, one in 2001 and one in 2003, and basically calling for the next bull market in gold. And at that point, gold was trading at 250, and no one believed it. I mean, no one believed it. I was ridiculed, but I laid out a very intelligent case, and I think that if you go back and read what I wrote, 15 years ago now, a lot of what I said came absolutely true. And so, I wrote those articles, and I invested in gold heavily. I sold all my U.S. dollars because it had peaked at that point, bought a lot of gold, and I thought to myself, well, if I really believe this, I might as well go make some real money. And what do I do best is create mining companies. So that's exactly what I started doing. And
what we're showing you here on our YouTube channel is just the tip of the iceberg. No matter where you are in your financial journey, whether you're a beginner just looking to break into the market or a financial professional looking to up your game, Real Vision has something for everyone. Every day, our team of expert journalists provides in-depth analysis, written reports, access to live streams, and access to our community, The Exchange, where you can interact with people just like you from all over the world. For just $1, you can unlock all of this and more at realvision.com. Try our Essential tier. If you like what you see, it's only $20 a month thereafter. So click on the link in the description, go to realvision.com, and see what you think. We look forward to seeing you there.
If I really believe this, I might as well go make some real money. And what do I do best is create mining companies. So that's exactly what I started doing. And the first one was Wheaton River, which we created in 2001, which was my idea. I brought in Ian Telfer to run it, and we raised a bunch of money and went out to build a gold mining company by way of acquisition through M&A activity, and that became Gold Corp. Very successful deal. And then through the course of that next decade, I created many more mining companies in different metals, some oil and gas companies. I just saw that whole commodity cycle coming, and I thought, I'll do what I do best. And it was a very good run up until 2011. And we did very well, probably created dozens of companies and raised billions and billions of dollars doing it and made a lot of people a lot of money. Then, as we all know, in 2011, things changed and we went into a bear market in the commodity sector. And probably the only mistake that I made at that point was thinking that it was going to last 1 or 2 years. Yeah. And I think that's a classic mistake we all made. I think one of the mistakes most investors make is that they can't see the absolute tops and they can't see the absolute bottoms because things get a lot frothier than you ever expect and they become a lot worse than you ever expect. And so I sat back and picked a lot of what I thought were really interesting companies with great assets and invested a lot more money in it, and then had to wait a very long time for that to come back, which has only come back. This market, the resource market, 6 months ago. So late last year, I had the sense that this was going to happen, especially only with respect to gold. And I can talk a lot about gold later, but for a lot of reasons, I've been saying all along that all the reasons that gold went to 1900 in the first place, after the 2008 crash, are still there. Gold retreated back down to close to 1,000, but I couldn't figure out what the reason was for that 50% pullback, because not only are all the reasons that gold went up to 1900 still there, they've gotten worse.
It was, yeah, exactly.
They've gotten way worse, and so it was an interesting thing to watch, but there were reasons for it. There was a movement here in North America to get out of gold and get back into the markets with all that QE, all that printing of money caused this huge bull market in the S&P and most stocks, and gold was deemed to be, unattractive, because the good times were back. We'd eliminated all of the risk and all of the problems that happened that led us to the 2008 crisis, or so people thought. And there was a huge liquidation of paper gold into physical gold, and guess where that went?
Yeah,
to China. And so I watched all this happen. I was going, one of these days, and the Fed kept talking about raising rates. And I said right after 2008, it's not going to happen. It's not going to happen for a generation because they can't. And I gave all my reasons why the Fed would never increase rates. And so for almost 7-8 years, they've been talking about raising rates, and they promise they're going to raise rates, 1 or 2 or 3 times in that whatever year they're talking about it. And they always find an excuse not to do it because they can't.
Yeah.
But they can't say that they can't because that will create, a loss of confidence in the marketplace. So they keep saying, yeah, we're going to raise rates, but for this reason, we're going to wait another quarter or whatever, blah, blah, blah. And late last year, I kept saying to people, and I was interviewed about this, they're not going to raise rates. And I actually made a bet, a very famous bet I was interviewed by a newspaper. I don't know if you ever read this, but I was asked by the Globe and Mail newspaper whether the bull market in gold was over. And I said, absolutely not. And the guy says, are you sure? What would you bet on? I said, I'll tell you what I'll do. I said, if I'm wrong and this bull market is over, I will stand in Robson Square, which is the big square here in Vancouver, dressed in ladies' underwear, and I will sing Patsy Cline's I Was So Wrong. And people thought, you are going to make an absolute fool of yourself. I said, but it's never going to happen. I'm never going to sing that song. It's never going to happen. And I remember what really brought it home for me a couple of years ago is when Goldman Sachs came out with their
850 called.
No, they said this: the gold's going below 1,000. It's going to, and they were screaming this at the top of their lungs. There's an analyst called Jeffrey Curry. And he kept saying, gold's going to 1,000. He gave all his reasons, that, all the problems had been fixed, the economy was going to pick up, hiring was going to start, blah, blah, blah. And I believed none of it. And I thought, okay, they're being very aggressive here. It reminded me of when, a few years prior to that, when oil was trading 150, and they called it to go to 250 a barrel, and it went straight down to 75 from there. And I thought, whenever Goldman Sachs is that shouting, the top of their lungs, and is that convinced about something, you got to be suspect. They must have something going on there that they need to promote this idea. And so I took that as my buy signal a few years ago. I said, gold's not going any lower, and it didn't. It never went to 1,000 when he called it was going to go to 1,000. And I just felt the desperation, because then they reiterated it last year, at the end of last year. He came out again and said, he had to, because it wasn't happening, so he had to, and it was starting to move up, and came up with a second report saying it's going to 1,000. He gave all the same stupid reasons. And I thought, okay, now they're desperate. This has to be it. This was at the end of last year. And I thought, okay, I told all my people, because I have an organization that is still intact, that looks at mining deals and does what we did for the last 15 years. And I said, guys, get ready. This is going to start. And at the beginning of this year, I said, start looking at special situations. Find me things that I can invest in. So I started buying into gold stocks, trying to find the ones that had the most leverage to the gold price. Because if you really believe, as I did and do, that gold's going higher, you want to pick the ones that have the biggest leverage. So yeah. I invested in a whole slew of these, and then I thought, okay, I might as well start doing what I do best, create mining companies. And so I've got my guys working full steam now. And we're very busy again. After being quiet for 5 years, dead quiet. The phones weren't ringing. We weren't calling anybody. We weren't doing anything. And now we're busy doing what we do best, which is to create and build mining companies, but focused on gold. And what really, the real buy signal came in March. And I was sitting on vacation. I was on spring vacation with my children, and somewhere very warm, and my phone rang, and it's this very famous investor, very well-known investor, and he said to me, gold's going to go for a run. And I know you're the gold guy, and so what do we do about it? And I said, well, first of all, I agree with you. And that day was the day that the Fed decided they weren't going to raise rates. And that was when the market finally started to believe it. Yeah. And that's when gold started its move. And all I can tell you now is that they will keep talking about raising rates. And they won't, because they can't, for a whole slew of reasons that I've gone through before. The economy is very fragile. If they start raising rates on this economy, it will tank it. It'll go back into recession, and nobody wants that. We've gotten into this world now where recessions are not allowed.
Right.
You can't. It's just like forever you had recessions. Now, no, the idea of a recession is, it's just not on. There are other reasons, I think. The Fed's own balance sheet is in jeopardy. It's highly levered, with over $4 trillion balance sheet. They're insolvent, as far as I'm concerned, in terms of what their portfolio is with the longer maturities now. Who are they going to sell that to? And if they start raising rates, they're going to tank the value of those securities, because they're all longer maturities. And the real reason is the federal debt. You got a federal debt that's closing in on $20 trillion. That has to be serviced. And when you have zero interest rates, you can service it okay. You normalize rates. I did the math once, normalizing rates on $20 trillion in debt. It'd be about $800 or $900 billion a year just to service that debt.
Interest, yeah.
It would bankrupt the government. And and certainly Japan is a similar situation. That's why they've had zero interest rates forever and ever, because they can't. They'd bankrupt the country. And everybody's headed in the same direction now. Everybody's piling on debt because we have a global zero interest rate environment and negative interest rate environment in a lot of countries now, and that just promotes bad behavior. So everybody keeps thinking, well, we're fine now. We can keep doing what we're doing. We don't have to fix anything, and they haven't fixed a damn thing since 2008. They've just made it worse. So they've done nothing to fix things structurally. They're in a inescapable trap right now of zero interest rates, which has become a global phenomenon. And I don't know how you get out of it. I just don't know how the math is ever going to work, that they're going to ever unwind this. And so that means to me that as soon as the world starts to realize, and as the investing world starts to realize that this is reality, and it's going to be reality for a very long time, that's when gold is going to really take off. And one of these days, One event will happen, and I don't know what that event will be. It can be loss of confidence, it can be a financial disaster with an institution, it can be a geopolitical event, but some event is going to take gold up to some crazy number, and it'll go parabolic. And that's happened before. It's not like it hasn't happened. It happened in the late 70s, in 1980. So that's my bet on gold. And I really do believe that you have to own gold. You can't ignore it. And as most investors have completely ignored gold. It used to be standard in the old days of portfolio management that 5 or 10% of your portfolio was in gold. That went out the window years ago. And now it's like, gold is a relic, and this and that, and everybody, all the policymakers try to play it down that it's unimportant, it's a barbaric relic, it's not a currency, it's blah blah blah. They'll make whatever, because they don't want you to own it. Because if you own it and you drive it up in price, it tells you that you have no confidence in the system, and that's at a time when the system is so fragile as it is now, where any accident can cause a complete collapse, you got to inspire confidence. Sure. I mean, it's all about confidence.
Well, it's funny. You said a couple of things there that really strike a chord to me, and one of them, you said, I felt that this was going to happen. And whenever I speak to, particularly in the resource sector, successful, smart investors, they always have that intuition, that gut feel, and it's really something that you either have or you can't teach it to someone. What do you sense now in terms of the price and gold? Are we going to pull back a little bit? Are we going to stay here, or are we ready?
Short term, I've never ever tried to predict gold short term, because the thing about gold is it is extremely volatile.
Yeah.
What I predict, it will do this, a lot of this, and there will be moments in time where you think, oh, it's not going to happen, and it's always traded this way or this way. It doesn't do this and that. That just doesn't happen with gold. It's very volatile. I just think, honestly, this gut feel that you just referred to is common sense.
Yes.
And I think a lot of us get bamboozled by all these talking heads on the likes of all these investment news channels, these people that are trained like monkeys to say certain things and promote certain ideas, and that's all they know, or that's all they're allowed to say, or whatever the situation is. And a lot of this is just common sense. It's just, you can't argue with the arithmetic.
But I completely agree. And the mathematics of it are, you're right, they're inarguable and they're also inescapable. Mm-hmm. But that ability for people to trust and act on their own common sense, that's, I think you're absolutely right. I've never thought of it in those terms before, but most people have it, but then they allow themselves to be shouted down by who they perceive to be smarter, more informed people.
Yeah, and what most people don't realize, or if they realize it, they don't really think it through, is that those people, those talking heads on television, are there to promote their own book, their own investments, or their own approach to the marketplace. Yeah. And the last thing they want to hear is that someone who's a party pooper comes in and says, your party is all fake, and it's going to implode one of these days, and you're going to get another crash, another crisis. They don't want to hear it. Who wants to hear that? Because that's not the game they're in. And Wall Street's certainly not in that game. They don't make a lot of money. If you said to Wall Street, okay, you can only play gold and the commodities because everything else is going to be shit for a while. Sorry, but it's not a big enough market. They can't make the billions of dollars that they make in all of these fancy securities that they create and all these investment ideas they come up with, and traditional portfolio management, which has gone completely out the window now. It's just like, the idea that you can run a portfolio in the traditional manner is in this environment is ludicrous. We're in an environment that's completely uncharted. We've never seen what we're seeing today at a global scale. It's never happened. It's happened to individual countries. We're seeing aspects today of what's happened throughout history in individual countries. But at a global level, what's happening now is unprecedented. No one has ever charted these waters, and they're trying to apply traditional portfolio management theory into an environment where it doesn't make any sense. And a lot of people are going to get killed. I'm absolutely wiped out one of these days because they continue to believe that certain things are going to continue to go higher, that it's safe to buy 30-year bonds at almost 0%. It's insanity. But that's the system is set up to promote that still works, it's intact, and that we're not in danger of collapse. No one will ever talk about the danger of collapse because It's not in their
Oh,
interest.
you're right, and nobody wants to hear it. I mean,
Nobody wants to hear
really
it. You know, we're all us people that talk about these things with a lot of common sense are poo-pooed. You know, we're called fringe players and fanatics and, you know, gold
bugs, even worse.
Gold bug. I'm not a gold bug. I like gold because now's the time to like it. Someday there may be a time not to like gold, and that's fine. I don't care.
I'm exactly
but
the same.
it's just the thing to be in right now, and it certainly will be for the next few years.
So let's talk about the mining business, the gold mining business in particular, because when you get these turns and you get the bear markets turn into bulls, what kind of activity are you seeing at that inflection point that you look for? Because there's going to be a lot of people watching this that want to invest in gold mining stocks and don't have the kind of experience you have and know what to look for.
I think you have to. The one thing that happened over the last 5-6 years is that the gold mining industry had to get a lot of discipline.
Yeah.
Because they didn't have the discipline because it was a bull market. In a bear market, everybody started looking at their costs. And I've seen a tremendous change in all-in adjusted sustainable costs for mining per ounce that have gotten down to reasonable levels now. They were really high. And so you've got a very disciplined industry right now, some more than others. So it's all about stock picking if you're looking at what's already trading out there. And so it depends what you believe. If you believe there are certain stocks you would play if you believe gold's going a lot higher, but have risk if gold goes lower because they're more highly levered to the gold price. I think Barrick was one of those examples. And there are others that you know are provide more safety because their costs of production are much lower. And so you just have to be careful about the cost of production and the ability to replace ounces. And those are the two main things. Obviously, geographical risk, which is important in today's world, really important. And so, yeah, it's, but a lot of, you know, I think the industry in general has become very disciplined. The platform is there now, and you just have to pick the right stocks. And, you know, I don't do stock recommendations, but there are a lot of smart people that do.
So when you talk to the guys that run these companies, is there a sense you're getting from them that they've learned lessons from the last bull run? Mm-hmm. They feel there's another one coming and they're ready to really take advantage of it rather than just issue stock every time the price goes up?
Yeah, I think you'll see some of that.
Yeah, you always will, yeah.
There's been no ability to go to the capital markets for many years. Now you're seeing it, like I know I've watched several companies go to the market, some that I'm involved with, to take advantage of the fact that their share price has gone up quite dramatically in the last year, and you had to raise some equity.
Yeah.
But I think in terms of the actual operating discipline, I think that's going to be in place for a long time, because I don't think a lot of people still believe, like I believe the gold price is going a lot higher, but I don't think that that's the industry in general.
No.
By a long shot. Most people are still very gun shy. And it reminds me of 2001 when I was out there promoting my idea about gold going higher, and I was having these conversations with investors, professional investors, and mining executives, and they all thought I was nuts. They said, "No, you have no idea. It's terrible. It's horrible. It'll never get better." I said, "You're too close to the action. You can't see it. Yeah. You know, you can't see the forest for the trees because you're in it. You're living all that daily grind of having to survive. But if you step back and just think about this logically, you'll understand that gold will go up." And I think it's the same scenario today.
Do these guys believe it, or are we going to see the return of hedge books, for example? Are these guys going to get to maybe 13, 50, 1400 and suddenly start hedging again?
I think some will, as some always do. You can't prevent each company is run differently with different views on the world, and I think you'll see a little bit of hedging. I think investors who buy gold stocks don't want to see it.
No.
So, and the managers of these companies are aware of that. They know that. And I've had these conversations on several boards I sit on. It's like, no, you can't hedge, because if you hedge, you're just telling the market you don't believe in the gold price. So they're going to be very careful not to, but some will.
Well, what about, the thing that's always really interested me is why, and Newmont Mining did this a little while ago, they linked their dividend to the price of gold, which was interesting. Why do you think none of these guys will pay dividends in silver or gold? Because I would have thought that would be a very interesting thing to do.
It's been done in the past,
yeah, but very sporadically.
Very small. Yeah, I don't know. Wasn't it McEwen that did that?
Yeah, I think Rob did.
It was Rob. Yeah. I think that he got a mixed reaction. I don't think everybody fell in love with that idea. There's lots of the real gold bugs believed that was really intelligent, and other people will go, no, you shouldn't do that. But I don't know. I don't think that that's the reason that people are going to buy gold stocks, for that prospect.
No, sure. But I'm curious because you look at guys that run these businesses, and when I spend time at these conferences and around guys like you that really know the industry inside and out, and I'm always struck when I speak to guys that run these companies. Sometimes to them it's just a commodity. Gold is another commodity. It's not a monetary asset. It's not any kind of hedge. It's just what they pull out the ground and they sell at a profit. Do you think there's a movement coming where guys will suddenly understand the massive amount of power they have over their own situation just by what they control, or is it always going to be?
But you'd have to have the whole industry fall in line with one approach, and it's never going to happen. Like if one company does it, it's it stands out. But I don't think the industry is ever going to say, okay, this is what we're going to do as an industry, and as a policy of believing in our own gold price,
right? Because
everybody has different beliefs. I mean, I've worked with managers of mining companies that are gold bugs and ones that are just there to run the business.
Right.
They're just there to run a business.
Yeah, it's interesting because when you look at what you can do with the supply and demand, and if when you're pulling that marginal ounce out the ground, if your production cost is $13.11 and suddenly it gets to $13.12, so you start pulling that out. I'm thinking, well, why don't you wait? Because
it'll never happen. Not as an industry.
Really?
Yeah. Because a lot of the investors don't want that. They're not. That's not the reason they're buying the gold stock. So I don't think it'll. I know it's been discussed and lots of people have brought it up. As an industry, it'll never happen.
So what is the future of this industry? Do you think? Where does the gold mining industry go? Because it had a bad rap. Hopefully, it's cleaned itself up.
Yeah.
If it has this tailwind of a strongly rising underlying commodity, what happened? What does the gold industry look like? Let's say, what does the gold industry look like at $1,500 and at $2,000 gold?
Well, I think what's going to become interesting is that there's been very little exploration done over the last number of years because everybody cut their programs. Certainly the juniors didn't have access to the capital markets, so and traditionally that's where most of the exploration comes from, is the juniors. So that was gone, and the majors were all cutting back on their budgets, so they stopped exploring. Replacing reserves is going to be the most interesting aspect of this next market. Is where you're going to find that next multi-million ounce deposit that is going to be economic and be put into production, and that's the business we're in.
Yeah, exactly.
And that excites me. So I think you have to look at opportunities, and again, everybody has different risk profiles, and I'm not here to promote one idea or another because it depends what your risk appetite is. For me, I prefer to find assets that I can get my head around in terms of the existing economics. It may require some more work to get it to feasibility or financeability as a project, but at least I can define it and go, okay, this is the parameters, here's the grade, here are the economics. This is, if I do this, this and that, I can create a gold producer with this kind of value. And that's where I think you're going to find the most exciting opportunities in this next cycle, because no one's been doing a lot of that for a lot of years. Now the exploration, the greenfields exploration stuff is always going to be interesting, but those are 1 in 1,000 shots, and that's like, and you can play that game, but it's a tough game.
So where are the places that people are now moving? Because the US is tough to find deposits unless you're out in places that they don't want you to drill. Canada similarly. And everywhere else starts to look a bit dangerous. Australia it's more the people who are dangerous down there and these fighters. But where in exactly.
That's where I'm going to focus for a little bit.
And which countries? Because they're a real mixed bag down there.
Well, instead of saying which countries I would go to, I'll tell you where I wouldn't go. Right now. And by the way, I may have this opinion, and others may say, well, you're crazy. There is an opportunity there. I don't like Bolivia. I don't like Ecuador. I don't like Venezuela at all. Brazil's tough right now. So the others are okay.
Yeah, it's interesting because when you talk about those, Bolivia, places like that, people have been spending a lot of time down. A lot of people have gone down there to look. Ecuador.
Well, geologically, they're fantastic places. But the politics and
what about Argentina? I mean, now
Argentina is, I think is on the right path.
Yeah.
where it wasn't.
Sure.
But with this new government, I think Argentina is incredibly prospective. And I think as long as this government stays in place for a while and does what they're already doing very well and very quickly, I think it's going to be a fantastic place, even more so than Chile. I think Chile is regressing a bit, and Argentina's on the rise.
And what about Africa? Because that's somewhere that you have to have the right appetite for that.
Well, Africa is a very big place.
Yeah.
But
people boil it down to Africa. Like, I'm not touching Africa. They don't look at the individual countries.
But that's crazy.
No,
because
I
there
totally
are a lot
agree.
of great places in Africa. There are a lot of really bad places
Yeah.
in Africa that you should never go near. And I'll mention it because I'm on the board of Endeavour Mining. Endeavour Mining is one of the largest producers in West Africa. They operate in 5 countries and have mines in 5 countries, operating mines. And we've been at it for 8 years now. There are challenges, but we mine the gold, we sell the gold, we make money, and we haven't had any real issues that have ever affected us in an important way. I mean, you manage your way through these. So there's lots of countries in Africa that it's okay, and there's some places I would never go near.
Sure.
And that's just the way it is everywhere. You've got Russia and Central Asia, which are, to me, no-goes at this point. Right. Even some parts of Europe I would worry about. But, I think parts of Africa are really good, and certainly Latin America, for the most part, is really good.
Are you seeing any shifts in who those buyers are? Because everyone talks about this mythical Eastern buyer and the gold moving from west to east. Are you seeing strong demand out of certain places that's adjusted?
We don't see it. We as the producers don't really see. You can just generally the World Gold Council kind of has a rough idea where, and even if you look at China, which has been the biggest buyer, I mean, they're not very transparent.
No.
You don't really know how much gold they're buying. All I do know is that they're the world's #1 producer, and they don't export any gold, and they import gold. It's got to tell you something.
Yeah.
Okay.
And they have been for
7
or 8 years. Yeah.
And these are very conservative, very industrious people, and I think they're a lot smarter than, the rest of the more advanced, societies, right now, who I think are being completely foolish. We're betting on paper, that the world is run by paper, and this paper is becoming worthless, and we're making it more worthless every day, and we still have faith in all this paper industry. I think the Chinese are looking at it and going, no, I don't trust this paper. I want to own the physical stuff that is a currency.
So how do you think, we've spoken about the Fed, and we've spoken about the engineering that's gone on and the leverage that's been put into the system in order to try and save it. Just in closing, how do you think this plays out ultimately? Not when, because none of us know that, but how do you see this finally resolving itself? Because I'm always curious as to how people think it plays out.
Again, I'm going to sound like one of these fringe nut, guys, but but I've been saying this for long enough.
You're too well dressed for that, Frank.
But seriously, I think that we're on an irreversible path. I can't see a way to unwind the mess that this world is in right now, to unwind it in a way that doesn't cause some kind of a collapse. And no one wants to see a collapse, so they won't let, normally if something is dysfunctional, you let it collapse and then you come in and you clean it up and you restart. Okay, that's what you do in businesses. The governments aren't doing that. They're not allowing that anywhere. So they're all on this path of debasing their currencies. Everybody's trying to, it's a currency war of sorts all over the world. Negative interest rates, the printing of money, no fiscal discipline, no aggregate demand. There's no real growth in the world right now. It's not coming from anywhere. It's over-levered beyond belief, and it's become way more over-levered since 2008. What got us to that crash in 2008, you would have thought by now we would learn these lessons. We haven't. So what do I think is going to happen? I think that what you're witnessing now, what you've been witnessing the last number of years, is the greatest transfer of wealth in the history of the world, and no one's even noticed. No one's noticed how it's happened. All they're noticing are the effects. They're feeling poorer, the population. And what you're seeing in terms of politics in Europe and in the US today, that's a manifestation of that anger. that people feel something's wrong. I feel a lot poorer, or I'm out of a job, and all these rich people are getting richer and richer. The wealth gap is growing like crazy. So one of two things is going to happen. Either you're going to have some very radical political behavior, which always happens when people feel disenfranchised to a degree that becomes unbearable. And so I think you're going to see radical politics, which is very dangerous for the world. And we've all seen it before throughout history. Sure. It's a very dangerous thing. Or you're going to see another collapse of some financial institution somewhere. And who knows where that's going to be. The US, Europe, China, it can happen. It can come out of nowhere. And it's going to surprise everybody. And everybody's going to go, oh my God, how did that happen? It's been happening. Like, we have set ourselves up for that eventuality. And it's going to happen. I don't know if it's going to happen tomorrow, 10 years from now. But it's going to happen because there's no path out of this without creating a depression. And nobody wants a depression. Nobody wants to say, okay, we got to just clean up the debt, start over again, restructure. And no one's restructuring. So, you know, when in business, eventually you have to restructure. Governments aren't doing that. So I think someday it'll end up in some other collapse. And I think we've run out of ammunition to deal with that kind of that eventuality. I don't know what do you do next? You know, now they're talking about helicopter money. You know, what's that going to do? Now, okay, so you print money and you loan it directly to the government so they, create fiscal stimulus. Okay, really?
Yeah.
Is that what they're going to do? So I don't know. I just think it's a very dangerous time, and I think as investors need to be cognizant of that and just plan accordingly. And to plan accordingly, you should be diversified geographically. You should be diversified across all asset classes, and that's all you can do. And the rest, you just pray and hope for the best, because you'll never know the timing and you'll never know the event. It will affect different asset classes in different ways for different periods of time. But at the end of the day, you just got to be diversified. I think that's all you can do. That's what I do. I'm diversified. I can't predict what's going to happen.
Frank, it's been a great pleasure. Thanks so much for joining me today.
Yeah, my pleasure, Grant. Thanks.
Thank you for watching this interview. This is just a taste of what we do at Real Vision. To learn more about the complex world of finance, business, and the global economy, click on the membership link in the description. Give us 7 days to change your life. This will be the best dollar you ever invest.